Mr. Padmanaban, I want to know from you what is the importance of asset allocation in investment.
No, actually, I'm not the big believer of asset allocation.
Okay.
Okay, so every mutual fund distributor will say no asset allocation, asset allocation.
Okay.
But I'm totally different. The reason is very simple. My client base is more of a retail client. So
Okay.
the retail client, I'm only creating wealth for themselves. Not that somebody already made money. So when somebody already made money, then I can put different investments. So the asset allocation is possible. Number one. Number two, why I'm not doing is, say for example, everybody knows how to invest in fixed instrument. Everybody knows how to invest in gold, real estate. What they don't know is how to invest in mutual fund or stock market. This is only they don't know. So if they are giving money, let us say 10,000 rupees or 1 lakh rupees or 5 lakh rupees. So again, in the name of asset allocation, if I put each and everything, I'm unnecessarily doing the redundant work because none of the investor will share their entire portfolio immediately. So the point is, I'm taking the investment and based on their long-term goal, say for example 10, 15, 20 years, for that there is no need for a asset allocation. To me, asset allocation is something you just reduce the volatility so that the journey will be less volatile. But I am taking a individual investor. For them, the journey is in a national highway. Say for example Chennai to Bangalore, which is a national highway, their minimum speed is 100. So all along Chennai or Bangalore, I was driving only 40-50 kilometers. I should not apply the same mind. Here, 100 kilometers is a minimum. So I generally prefer not a asset allocation, but somehow it works. So I am in the industry for the last 18 years. I am only doing mutual fund only doing equity. My focus is only on small and mid cap. I have a laser sharp focus.
So, according to you, what are the main factors in a scheme selection?
So scheme selection is very, very important. See, most of the investor or MFD, they are doing the scheme selection based on the past performance.
Okay.
So for me, past performance is not important, but we should also look at the fund manager pedigree. That is important. And if the fund is new, and definitely they have everybody wanted to prove. If somebody is a big fund house or big fund, they have done in the past, so they can little relax. But if somebody is a new, say for example, if you take the wealth company is new. So I am willing to put or willing to suggest wealth company, provided I am interacted with the fund manager. When I get the confidence, I will bet on wealth company rather than somebody which is a well-known company.
Okay.
So because here, since you are new to MF industry, you may be big in AIF and PMS, but when it comes to mutual fund, you are a new. Okay, so you will try to prove yourself and taking all your learnings from the other two products, and you will do your best. So when you grow, I can also grow with the company. I generally catch them young. I look at the fund house or fund which are relatively smaller, so that if the fund is starting 500,000 crores, I can also grow with 10,000 to 20,000. I will not suggest a fund which is 10,000, 20,000 crore, which has already grown. So hardly very, very minuscule to grow. So that is how I do.
Thank you very much, Mr. Padmanaban.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.